You got caddies, you got boards. I mean, you've got it all.
He's stacking his feet.
And hopefully sell it. That'd be good.
There's groups. He was like Alice in Wonderland. Cars kept growing around us. I kept shrinking. Oh, right here. Here's a bumper. So there was a 63 up here.
Up high,
Bumper buried down here.
down low.
Bumper center. I think that's some. This unbox is 63. Yeah.
Cool, cool, cool. Alright, I got the recording set up. Everything is good to go now. We can get this started. Alright, so what's everybody? How's everybody doing? Welcome back to another video, another stream, another analysis, another deeper look, another institutional perspective breakdown of our current range, as well as just plays in general, right? Getting to look at the same certain market behaviors, the same practices over and over again, right? Trying to get that drilled into our mind to see these certain plays setting up, see these actions happening, right? As we are trading, so we can see them live on the charts and we can be comfortable entering plays on charts. Now, I talked about just in my members picks what I'm going to be going over. We talked about the range. I'm going to do a deep analysis today on liquidity. So we're going to do a little bit of liquidity definition, a little bit of liquidity examples, and how we can use it to our advantage, as well as how we cannot be fooled by liquidity. We're also going to be reviewing a little bit of a Euro USD short that I was in chat with Braden talking about to show how these concepts apply to any charts, any candlesticks, because it is the perspective of institutions, right, of larger forces of money, trading these charts, being able to move and manipulate these assets, so then us as institutional logic traders can go and take advantage of that. So I believe we are on our second half of the range. We are around this area, starting on this ETH trade. So just a quick reiteration, right, re-example to get us back into the market structure of this certain zone, right? So if I go back to replay mode, let's go back to over here. And we talked about the long that we cut to these highs right here. And then we talked about the following short that we cut to an hourly demand zone down here, right? Just within our swing structure of this. Right, so our higher time frame swing structure versus our lower time frame swing structure. So now if I go to my daily structure, right, we're looking at something like this. I'm still looking for this high or this high to be breached because this high caused a new low in order to take any type of long trades at this point. Just looking at this, right, this is your daily. We go down to our 4 hour. We can see our 4 hour trend, right? This low was breached down here. So this is our strong high, right? Our liquidity rate to the upside, introduction of supply within this area. Our break of structure to the downside, right? Here's your supply candle, institutional candle within the supply candle. This can be refined down to the hourly now. You can see imbalances within this zone, right? After this liquidity rate to the upside, hourly break of structure to the downside, following this low that caused a new high. We got a sign of weakness created, right? We get another upthrust, another distribution, manipulation schemes start to play out within our zone of supply, right? And then we get that final break of structure to the downside. We talked about the mitigation of the hourly supply. I'm just going through this really quickly so then we can get on to the next trade to show you guys how that was taken. So now we got the 4 hour break of structure downside, right? This is the 4 hour low that caused the new high. We don't have the complete, this is the 4 hour low that caused the new high. We don't have the complete confirmation until this low is breached, right? But we do have liquidity that was being created, as well as introduction of supply, as well as a overall higher time frame bearish structure. So we raid liquidity to the upside, break structure to the downside, right? Introduce supply with the breaker structure to the downside. After the liquidity raid, we break structure on the hourly, and then if we look in the 15-minute going down here, we end up getting our final 15-minute breaker structure. Supply candle is formed, and continuation is followed from that. So now, looking at current price, we still know that this low right here caused a new high, right? If I'm looking at it just like this. So to keep it as simple as possible, I could still see a higher low be formed and this high taken, right? This could still be considered a weak high at this point in time, the way I'm looking at this chart. Just due to the higher time frame swing structure. It's a possibility. I'm not looking to take longs due to all the bearish structure that I've received within, right, as well as our overall bearish bias. But this is still a possibility, so I can look to take trades possibly to these highs over here after these breaks of structures to the upside, or to supply zones up in this area after this breaker structure to the downside. So that's exactly what we look to do, right? We end up catching the long. I went over the long in one of our recent streams up into the supply zone, and then from there, this is where we'll look to take our next trade. So we see our first introduction of supply here, breaker structure downside. Liquidity is formed. Equal longs are getting in trades, the equal longs shows that we have a lot of longs getting in trades, putting their stop losses underneath these lows because they see this impulsive move to the upside, right? They believe price is coming down, mitigating demand, and making a higher low, which is clean, right? This could be very valid, but what they must understand is with this introduction of supply, with this liquidity rate to the upside, followed by that immediate bearish engulfing, those immediate institutional candles with a lot of volume breaking structure to the downside, right? This one impulsive move we can see on multiple time frames holds the same exact confluence as far as that large break of structure to the downside, right? It broke 4-hour structure, this area as well, broke the 1-hour structure, right? We can see the institutional candles, that distribution that played out here on lower time frames, right? Same exact scenario. We can see almost the same situation happen over and over again. So come up, mitigate supply. We see another liquidity raid to the upside right here. Let's get rid of this. Actually, let's just make this an entire area to show you guys what I mean. So this entire area is supply, right? So once price comes into my supply areas, I know that this is just a general area of where there are more sellers in the market, where I believe there are more sells in the market, right? I'm not looking to take trades just because it's in this entire area, because if I'm taking a 4-hour trade, right, in this case, what we've talked about before, higher stop losses, right, destroy my risk to reward. Now I have a 2-to-1 on something that I'm trying to hold for a few days, right? I want to make a lot more money, so I'm just going to do a little bit more work. In this case, we come into supply, right? We mitigate institutional candles, right? You get your breaker structure here to the downside. Right, we can see that institutional candle here. If I go to this exact candle on lower time frames, we will see redistribution, right? We will see accumulation to distribution, which is exactly what I'll do just to show you guys what I mean. Right, our drop, base drop. Zone of supply is formed, our redistribution is formed. So we're looking at this entire area for sells. It's in premium of our 4-hour supply zone, right? We found an institutional candle within that sponsored this entire 4-hour breaker structure to the downside, right? We had an hourly breaker structure within this area, as well as a 15-minute breaker structure to the downside, 15-minute redistribution, 15-minute institutional candle in premium of a 4-hour supply zone that was created after a liquidity raid to the upside following a 4-hour breaker structure to the downside. So one, we can look to take sells here, or if we want more confirmation, right, we can wait for that following breaker structure to the downside, look for imbalances, the same exact thing, right, that we just did here, but now over here after even more confirmation, right? So we could look to take sells here. Right, stops over the either the zone, or you can put your stops over lower time frame highs that sponsored a new low, right? A strong high. Look to take it to either the liquidity, or like we did, we took it to the hourly unmitigated demand, right? That was a discount of this entire move. So let's say we were looking to take longs, right? This is a good little rule for take profits as far as something simple to understand, right? So if I'm going to long this move, right, this trend in this situation, right? We talked about how we made the new high, and then we could come down, right, create a higher low and take it to the upside. So if I wanted to long this, right, talking about premium discount, talking about cheaper prices where I'm going to want to buy, right, I'm going to want to buy in discount. So if I was selling, right, if I was selling or shorting the token, shorting the asset, whatever it is, in this scenario, right, I'm going to look to take profits in discount. Why would I take profits in premium if I'm selling in premium, right? I want to be selling in discount, or taking profits, sorry, in discount if I'm selling, taking profits in premium if I'm buying, right? But so it's just the opposite for each bias, but that's just a simple little way to look at take profits as far as, well, I don't want to get too greedy and run it all the way down here. But you did all the work, right? You have a 4-hour breaker structure, 1-hour breaker structure, 15-minute breaker structure, 5-minute breaker structure. You did everything you needed to do to get to this point. So now you can take it to those 4-hour lows, right? So I talked about the first institutional candle, right? And then we see liquidity imbalances within this zone. We can talk about a couple more entries as we're coming up into this area, right? We raid liquidity to the upside, break structure to the downside. Structure is broken to the downside. Let's just bring this back a little bit more for you guys to make this easier. Bring me replay mode over here. So now, right, we entered this trade, or let's say we didn't enter this trade. We see this play out. We see the following hour breaker structure to the downside. Now we're looking to take trades within this zone. So on even more confirmation, right? So now we have an hourly institutional candle, right? This hourly zone of consolidation before this breakdown. If I'm looking in within this entire zone, right, we can do some refinement now. The 30 to the 5 and even lower, right? Here's your last sell before buy candle. Do we want to refine it down to there? We can. So I'm doing the entire wick. And the reason I'm doing the entire wick for this candle, let me get rid of this. The reason I'm going to be utilizing the entire wick for this candle is because if I go on lower time frames within this wick, we had a liquidity rate to the upside as well as an introduction of supply. So there is definitely supply within this area. Now, it doesn't mean I'm just going to look to buy within this wick because it's 50% of the wick just because it's premium. I'm going to need more confluences, right? So I can see now after this liquidity rate to the upside here, right? We had our liquidity rate here. Equal highs were formed on the 15-minute, another liquidity rate to the upside, right? What do we form here? We form an imbalance. Let's make this a different color. Right, so we could look to possibly take sells on this zone. same exact thing, right? Take it to the downside, or look to take sells after a following 5-minute breaker structure to the downside, because now, right, structure could be considered bullish internally as far as the 15-minute goes. Demand could be created here, right? We could have demand creation down here following a liquidity raid. We're not sure exactly if we want to take that trade yet. Right, starting here, stops either over the imbalance candle or over the entire zone, right? In this scenario, I'm going to be looking over the imbalance candle, right? Because I still want that increased risk to reward. Running it down now to the week low. High that sponsored a new low. This is our new strong high, right? You can run it to the week low. This would be my take profit 1. And then from there into now demand. And then if that is broken, right, or a lower high is confirmed, invalidating that demand, then that can be ran to now the daily lows, right, because that is our daily week low. So now we look to see, price taps in, stops us out, and then it's exactly what we were talking about before, right? Now if we were running that higher stop loss, this would still be a valid trade. Now there's two situations we do here. One, I told you that we're waiting for that now 15-minute breaker structure to the downside because of this bullish internal structure, right? If we want to enter on either this imbalances or these zones in here, right? Or we can wait for that 5-minute or that following confirmation after reaching our zones of supply, right? So that's what we're gonna do here. So after we reach this zone, and this is why you don't see me enter limits a lot, because it's just imbalances, right? There's no nothing that tells me, yes, this zone is going to be valid. This zone is going to push price this way. Yes, it could have pushed price that way in the past. Yes, it could have done this in the past, but that's not what's happening on the right side of the chart. That money that was there years ago, months ago, what happened months ago is not what's happening right now. That's just what the truth is, right? We have to look at what's happening right now to trade the right side of the chart. So I set right alerts at this zone of imbalance. I see it now, tap into that zone, start to show some sort of manipulation of highs, right? We can see it's not, price is not respecting demand. So these uptrends don't look too healthy, right? It's not coming down into demand. It's creating equal lows. We're getting a lot of people thinking that this is possibly breaking out, trading to the upside, right? They're trying to take longs into the higher part of the range, right, at this area. But we are waiting for that final confirmation, right? Now we get that confirmation, right, that breaker structure to the downside in our area. We can look for zones of supply to now take this trade, right? Here's your 15-minute breaker structure to the downside. 15-minute supply candle is formed. Let's get rid of this. Alright, so now we've identified our zone of supply. We're starting to get more confirmation, right? We can look to take trades to the downside possibly after now a 5-minute break to structure to the downside, or if these lows are taken with more conviction. So we get those lows taken, right? Now we have more breaks to structures to the downside. You can see the 15-minute broke structure to the downside right here, right? We see an institutional candle within this zone as well. Zone of redistribution, just as I was showing you on the 5-minute. Go even lower in time frames, you can see the same exact thing, right? We see that lower time frame accumulation to now distribution, right? Our accumulation, distribution, zone of supply is formed within this area. So I've identified now these zones as possible zones to take trades off of. What's the goal? The same goal as it was before, right? To take it to those lows. Going now lower time frame. Wait for a mitigation of either or, right? We don't end up seeing that mitigation. That's perfectly fine. No trades for us. We will let it go. Why will we let it go? Because we don't get every confirmation, right? Every single every rule that we need. Our rule, our selective set of steps has not come in place. So that therefore I'm not going to be taking any trades, right, at this time. So let's let this play out a little bit more, right? We can see our lows. We had entries up here. We saw our supply up here. We also have our demand down here, right? If we go to our first, let's play this out a little bit more actually. Price taps into our zone of demand, right? We start to get that break of structure to the upside. Now we still have that swing structure, that strong low that was created, right? As well as that possible weak high. Now we know this was a liquidity raid to the upside, followed by an introduction of demand, followed by breaker structures to the downside, followed by an overall bearish structure. So I know this is overall bearish, right? But we still have that possibility of a bullish structure due to the fact that we could have rated liquidity to the downside here, rated liquidity to the downside here, right? Mitigated demand, broke structure to the upside, introduced new demand within this area. Now we have a chance to go higher into the range. So now if we go on our higher time frames, right? We're looking at structure. We're noticing that we mitigate our zone of demand once, start to create lows, right? Start to create long traders in trades equal lows. Those are taken out, right? We get a breaker structure to the upside, our high is taken out, and then we get possible demand creation within this zone. Now, I'm also looking for what happened in the past, right? What previously happened to be able to look to take any trades in these areas, right? As far as take profits go, if I were to take longs, and as far as new short entries go. Why? Because remember we had those breaks of structures to the downside here, and then that first break of structure to the downside right here. So now if I'm looking at this move, right, I'm looking at this entire thing just like this, and price could come up into this area, right, create a lower high, and then continue down. Why? Market structure is bearish, break structure to the downside here, break structure to the downside here. So I can see price coming up this way, creating a lower high, continuing to the downside. So I'm going to look for areas of supply for possible take profits, right? If I want to long up into these areas of supply, following confirmation over here, right? Or I'm going to be looking at areas of supply in these zones to take this possibly to the downside if I wanted to wait for that trade, right? So in this case, I'm looking at the hourly now. I see that drop base drop. I have that identified supply in this area, right? I'm going to use this candle as my supply candle. We have one here, and then we have one here as well, right? This is our initial breaker structure to the downside. Let's go back. Right, candle before candle that broke structure to the downside, area supply, liquidation rate to the upside. This was an introduction up here. So now we're looking at our most recent structure, right? I can see this high formed right here. If I go on the 30-minute, I can see a high, a low, that high taken out after liquidity rate to the downside and demand mitigation. I have an institutional candle here. As well as my demand zone, right? If we go on the 15-minute, we can see the imbalances that this candle left after it broke structure to the upside. So in the consolidation, there's demand down here in this area, but I signified my 30-minute demand from that 30-minute break of structure to the upside. We're going to look to possibly take some trades now. we mitigate our zone of demand, right? Now our 15-minute break structure to the upside. Here's a high that caused the low. We have lower time frame reaccumulation in this area. High that caused a new low. Let's get rid of this to make this simpler for you guys to see. Break a structure to the upside here. As well as here, right? We can see this high that was taken out. This was your initial change of character, right? The reason from this is because this high here failed to cause a new low. Therefore, this low took out the previous high. Why is this not a break of structure yet? Because there are no previous highs that caused a new low that were broken just yet. So this is just a change of character, right? That show of strength. So from now, the hourly to the 15. So coming in, breaking structure to the upside. I've identified zones of demand. I see this institutional candle, right? We're looking at this entire area as a demand zone, as a possible zone to take buys if our 5-minute break structure to the upside after coming into that zone, right? Let's make this a different color for you guys. Price then proceeds, right? Doesn't tap into our zones of demand. That's completely okay. We will let it run away. Why? Because we don't have any trades at the time. Right? And then this is where it gets interesting, and this is where we can start to see, okay, that short idea, right? That initial breaker structure to the downside, this is where we can look to possibly take some trades to the downside. First off, it's not mitigating any of my demand zones. I didn't get any trades, right? I didn't get any entries for any clean longs. So that should already tell you something right there, right? That price is not respecting demand. One, it's just going straight up. Two, looking to raid possible liquidity up here, right? We've identified these highs as liquidity. So now that I have equal highs, right, I've noticed that liquidity right before a supply zone. So I can say, okay, we can look to possibly take sells on this hourly supply zone, take this to the downside, right? We're starting to create equal lows. Price isn't respecting demand. I didn't get any buys in this zone. If we notice volume, right, we can start to see the volume spikes on lower time frames. Volume spikes right into these areas where, like, well, it's not respecting demand. It's just literally going straight up. That's perfectly fine. We can look to take this trade to the downside. Why? Because we still have our original plan of action, right? Our overall bias. So we look to take short positions on this zone or this zone. This is completely up to how much you want to risk. The reason I'm going to choose this zone in this situation, right, this hourly zone, and have two ideas, right? Because if I'm going to choose this zone, this hourly zone, I'm going to need following confirmation because one, this could just break this structure point to the upside instead of rating liquidity, create demand, continue to the upside. So I do need that confirmation if I need this, as well as this one, right, following our market structure proceedings. But we have our one idea, right, and then we have our second idea. Where would we want to take a short position if we were to get in this area on this candle? That hourly supply zone, right? Same exact scenario. So now I have two ideas to look to possibly take this to those higher time frame lows. Because after we've come down, we've now created equal lows following breaker structures, created more highs, right? Strong highs that caused a new low. I'm looking to take this to the downside at this point. Still have received no breaks of structures to the downside yet. Price comes in, mitigates our zone. We get breaks of structures following that. So now I can leave this and say, okay, I'll look at this later. I'm not worried about this now. I still have this as a zone of supply, right? I still know this is a zone of unmitigated supply. But my first trade was tapped in. I'm still looking for my take profits, right? I've known that there is equal lows created within this area as well as demand. So something I want to tell you here is I'm not taking it all the way to the 4-hour lows yet. The reason why I have it set up as the 4-hour lows is because at this point in time, I feel like I have all of my confirmations to this area. Now, the only thing as I'm looking at this, in this swing structure, right, that I can notice is, well, this low caused a new high, right, in this zone. Like I said, this could just be a not a liquidity raid and actually a break of structure. So what does that mean? If we come down into this area and don't breach this low right here, right, that caused a new high, then we have the possibility to now create a higher low and continue to the upside. So I'm going to be looking to take profits, right, in these zones of demand first. This will be my first take profit within this zone of demand to conservatively and logically have my first take profit, take my money out of there, right? I'm good. I've made my money out of my trade. I can let it go from that point, right? I'm safe. I've protected myself. And my bias can be changed, right? I can know exactly what happens. If we come into this zone, create a higher low, then I can look to take longs, right? So we see this trade. We're still looking to take it to the downside. Price now breaks structure to the upside after tapping into our zone of demand. So one, we secured our take profit, right? Our first take profit at our zone of demand. We see a break of structure to the upside on the 15-minute. Sorry if I go to the 30-minute. High is created here. Low is created here. Break of structure to the upside here. So now let's get rid of this demand. Show you guys the new demand. Here's your candle that broke upside, right? 30-minute institutional candle as well as your demand candle. You can look to take buys if you come into this zone. Price comes down, right? Mitigates our zone. I'm looking on the 5-minute for any highs or lows that are created. We see a high here. We look for possible buys in this area. If we can get that following, right, we get that following break of structure to the upside. Now if price comes back into this zone, I'm looking to take longs. Stops underneath this zone, or you could do stops underneath the entire demand candle. This is completely up to you and your risk management. So something that too a lot of traders are going to ask me, or I've been asked a couple times, or people just believe as a general rule of thumb. As a trader, no one's going to tell you to press the buy button, right? No one's going to tell you to press the sell button or to press the sell button. At the end of the day, you're the only person who does that. It's your money, right? You are in control at the end of the day. So what this means is a lot of people will ask me, well, do you set like a certain risk that you want to be risking the entire time? Yes, I do, but it doesn't mean I'm putting the same amount into every trade. And why? Because my stop losses are going to be different on each trade, right? So I'm still going to allocate that 1 to 5% of my port that I'm risking, but that's going to be based per stop loss. So if I have a smaller stop loss, I'm able to put more into that trade, right? I can now risk more into that trade because I'm still risking that 1 to 5%, but I'm not throwing in a certain number every single time, right? So we have our entry, and then we're looking to now take it into that unmitigated supply. Why? 1, because it created a higher low. 2, we would consider this a weak high. 3, we have our zone of unmitigated supply in this area, right? So that's 3 confluences just for the take profit. Wait for price to tap into my zone, right? Doesn't tap, runs away immediately. That's perfectly fine. Where did I go wrong in this case? So we have a 5-minute break of structure to the upside here, right? We identified that zone of demand. Price tapped into that zone of demand, broke structure again to the upside. This is your next demand candle, right? You see this impulsive institutional candle that broke structure to the upside here. If we pick a zone of demand here, right, we see that same thing following. But we still have our lower zones. So we had, I believe our entry was like right here. We still have that possibility, right, of price coming back down into our zone, tapping and taking off. Let's play this out a little bit. I believe price just takes off from here. Let's go to the 30. Okay, here we go. So we had that one break of structure to the upside, right, that we missed. In this sense, I showed you guys where you could have not missed it if you didn't need to miss it in that sense. But then this is the thing that comes with these concepts, right? They're like, well, how many times do you enter, or how many times are you still looking to enter a trade if your bias still holds true? So in this sense, we're looking to take this trade to the upside, right? So as long as price is creating higher lows, as long as price is creating lows that are sponsoring new highs, I'm still looking to take this trade to the upside. We can see here that this zone of reaccumulation, right, this zone of demand, is still holding valid as a higher low. Price could come back into this zone, create a higher low, and still continue within this area. So I can still get confirmation to enter trades if I miss this trade back here, if I miss this trade back here, or if I miss this original trade back here. Getting into these concepts and getting into these entries are going to be something that we talk about in the future. Right now, it's just getting the idea and the theory of what we're trying to look for when taking these trades. And keeping our plan in mind the entire time, right? So we have our 30-minute demand candle. If we look on the 15-minute look in this area, right, we can see imbalances left behind in this zone. So an inefficiency within the market, right? I can look to possibly take buys now within this zone if we come into this zone. Right, same exact scenario, nothing is changing. I just have that more of a swing structure formed. So we're looking to take buys if it comes in, right? It taps our imbalance. Saw backwards. Here we go. Price comes in, mitigates our zone of imbalance, right? We have our stops underneath the demand. Let's let this play out. And then we are targeting that higher time frame supply. Why? Because our confluence are still holding the same. We still have higher lows forming. Demand is still being created. This may look super choppy. This may look like you don't know what you're trading, right? But if you look at the bigger picture and look at what we were just looking at, you understand that price was still maintaining its demand. Price was still sponsoring new highs. So as long as it didn't come underneath this low here, then I wasn't looking to take this trade to the downside. One, because I had this breaker structure to the upside here, this higher low that caused a new high, higher low, I'm looking for a new high. I'm still getting higher lows formed, so I'm still getting demand creation, right? I can look to now take this trade to the upside. So now let's allow this to play out. We have our supply zone, right? Our unmitigated supply at the top of the range. So the hourly. Let's bring it right to that candle. let's go to right here. Okay, so we have it play out, right? We missed, let's say we missed our first one, missed our second one, but now we have our third one. We have our equal lows created, imbalance within that zone. Zone of demand still holds true. We're still creating higher lows, so we able to take the long. We take the long, take the trade up into the top of the range, into our unmitigated supply that we pointed out at first, right? So now we see how the market will react to different zones of supply and demand within a swing structure to liquidate traders and get people thinking it's going to go one way or another. But in reality, all I'm looking at, right, for internal structure in this case is a high formed here, a high formed there, and I'm looking at it like this. So once it still comes into the zone, right, the zone of supply, I can still see price going to the downside. I can still see price going to these lows. Why? Because we had this daily bearish, right, 4-hour breaker structure to the downside, hourly breaker structure to the downside. This is our strong highs, right? Strong high right here, strong high right here, strong high right here, because these highs caused a new low. So I can see price coming up into this zone, still creating a lower high. If we come up into our zone of a high that sponsored a new low, break structure now on the 15-minute or the hourly, sorry, then I will look to take this trade to the downside. So now within this case, right, we already have an hourly breaker structure to the downside, right? So I already said hourly, sorry. I didn't mean hourly, I meant the 15-minute, right? So we go and get into this zone. If we get a 15-minute breaker structure to the downside, we can look to take this trade to the downside from this hourly breaker structure to the downside after this 4-hour breaker structure to the downside after this daily, right? So let's go now on the 15-minute. We can see now the exact same thing that we were seeing before over here, right? Price is starting to not respect demand, right? It's creating equal lows. Volatility is rising, right? This is when we start to see our highs manipulated as we're coming up into our zone of supply. So you can start to see how price is starting to show us those clues, right? That we could look to possibly take this to the downside in our original plan of our strong high supply zone that created a new low. So now we wait for price to mitigate it. Price mitigates it, right? We're tapped out. This low right here that's caused the new high is broken. Let me show you guys the 5-minute. Right, the low is broken. And then following, we have a liquidity raid to the upside right here, right? These highs are taken out, followed by bearish engulfing to the downside. And then I think it's one or two. Let's play this. Yeah, one or two more candles, right? We get that final mitigation to the downside after these breaks of structures to the downside. We can look in possible zones in here, right, to look to take this trade. Or we can look at possible reaccumulation zones, or sorry, redistribution zones to take trades to the downside over here. Right, so actually no, let's bring this way back right to here. So I've noticed my liquidity, right? We create liquidity right before we tap our zone of supply as well as our take profit. At this point in time, right, I get that 15-minute breaker structure to the downside. I was looking for the 5, right? I got a liquidity rate to the upside followed by a bearish engulfing to the downside. So now I'm going to be looking for a 2-minute breaker structure to the downside, something I can look to trade in this case. Within this swing structure, you may look at this and see this is as bullish, but at this point in time, right, I have every single confirmation on every time frame to me, as well as mitigation of supply, as well as our strong high, right, as well as our liquidity rate to the upside, and I'm willing to risk a 2-minute trade to the downside, right, at this point. So I'm looking for these lows to be breached. We wait for price to come in, it taps in, breaches our low, right? We look for a zone of supply to take this from. Where's the candle before this one? We have a candle right here. Maybe we can take it if it taps into this zone, or maybe we can take it if it shows some type of redistribution. Now I look on the 1 minute after I look on this zone, and I say, well, this actually looks kind of taken care of, right? We don't see any imbalances or anything within this zone to look to take this trade, right? Now before this, I can see this institutional candle, this buy before sell candle, so I know this is a zone of supply as well, because we see that break of structure to the downside on the higher time frames that we identified. On the lower time frames, it looks like lower time frame redistribution, right? So I have this zone now. As a zone to take my shorts off of. I shorted with stops over my zone. Now look to take it in discount of this swing move, right? As well as my lows created. Why am I taking it to the lows? Okay, because we're on a 4-hour, right? Or sorry, not because we're on a 4-hour, but because our 4-hour trend is still bearish, right? Because our hourly, or we still need the hourly trend to be bearish at this point. Hourly trend is not quite bearish yet, but we're manipulating highs, right? We can look to break lows here. I'm looking to enter at this zone because of my higher time frame analysis, right? At this point in time, a logical take profit for me would be this demand zone right here, right? Because of this bullish structure that we have started to form. So we could possibly be breaking out. But at the same time, I see now the inducement of longs with this move, right? People talk about the three drives distribution, right? It's not so much as the pattern, it's so much about what's actually happening. What this means is it's a 3, right? Market maker psychologically of 3. We're moving up 3 times. Retail sees that and they're like, okay, we're gonna moon. So they all long it. You can see where retail longs, right? You can see where they get into these trades, and you can see where they start to believe that price is breaking out. You can see all of those lows. They see these as trusted lows. They put liquidity underneath those lows, right? So now we're in the trade at our 1 minute zone of supply. Price taps us in. We got following now, break a structure to the downside. So if I'm on the 5 minute, right? Let's say I missed this trade, I didn't see that come in, and I'm like, well, I want to take another trade now. How am I going to look to take this trade? So I've now identified that zone, right? I'm in it at this zone. I'm in it at this supply zone on the minute. But I also have noticed my consolidation before the breakdown, right? We have this redistribution here. If I go into lower time frames, I can see equal highs formed at this area, right? Relative equal highs here. As well as our supply zone that we had. Marked out. And then if I show this same exact area now on the 15 minute, right, you can see this candle right here. This candle before this candle. It's the one
Bitcoin.
Oh, she going.
She going.
She going. Let's take a look at her real quick, actually. Oh, she's going. Oh, off the zone too. Yeah, we're looking at long soon. This is actually really good. I like this a lot.
Yeah, she's doing the thing.
Yeah, she is going to do the thing very soon. Look at all of these highs. I definitely
Bounce
think
right
we're gonna
off
take
that
out on this.
demand.
Damn, these alts are paying.
What you in, Hood?
I'm in Lit, Sand, IMX, BLZ, and Bell.
I'm playing everything.
Oh man, not
You know what
again.
that mean?
I like
Oh
this
man,
Bull
zone though.
season.
the
Let's see how this
liquidation
15
bot
minute close.
activated.
Bull run. No
Almost
lit,
the
no lit.
highs.
Watch out for Valentine's Day.
Chill, man. We smart over here now, bro. We smart now. We institutional flow.
Institutional, man. Where are we at? Alright, back in our zone, back in our zone. It was like right here. Alright, so price comes, taps us in. Let's say we didn't get in here. We still have identified this zone as supply, as well as this liquidity in this area as well. In a different stream, I showed you guys how to enter after this liquidity rate to the upside and this introduction of supply within this area, but this supply is still holding true, right? We're still creating lower highs. So at this point, I'm still looking to take this trade to the downside. Right? This is just volatility. This is the market shaking people out, right? This is people trying to take long shorts. Doesn't matter what's happening. This is just a lot of volatility. What it's doing is it's the introduction of supply or demand in this case. In this case, it's supply, right? Institutional sponsorship. As they're rating liquidity, they're getting into positions as the market is opening up, right? We look to take this now to the demand first. If that demand breaks, or if I get a candle that shows that displacement, right, to the downside, then I'll look to hold this longer, right, because of our higher time frame analysis. Now we're stopped out of our trade here. I show you guys what happened after that liquidity rate to the upside, introduction of supply within this zone, and then possible trades you could take here, right? So this is where it can get confusing, and people are understanding like, look, I'm stopped out of my trade because of this, that, yada yada yada, right? Came up, stopped me out. What am I doing? So as long as it still created that lower high from this impulsive move right to the downside, I'm still looking to take sells within this area because it didn't break this new high, and we didn't get any real closures over these highs, followed by an introduction of demand, right? So this is our 5-minute break of structure to the downside to show the confirmation now versus limits at the zone, to where you could be able to specifically enter this trade now, versus just taking limits at this supply zone, because you would have been stopped out and been like, oh, okay, this redistribution played out. I don't understand, right? You can't just do the market structure now, just the supply and demand. You still have your Wyckoff, right? Your manipulation schematics that are going to come out and take these smart money traders out of trades that are trying to enter on these trades, right? So one, you could have entered on just the institutional candle, right? 5-minute institutional candle at these limits here. After you notice we've created the pool of liquidity, let's put this here. So your introduction of supply after your liquidity rate to the upside, your institutional candle. So this is where I'm looking at this candle right here and saying, look, like, this is where algorithms entered. This is where I believe smart money entered positions and look to take this to the downside, right? So I entered there, or I can enter the following 5-minute breaker structure to the downside, 2-minute confirmation. Same exact scenario right here. So this is where I'll show you that confirmation to where you can get it into it at the very end, right? So we waited for the 5-minute breaker structure. 5 minutes starts to show that it's breaking structure right here. This displacement candle is put in. I need a 2-minute lower high to now confirm this. What happens? Highs are taken here. 2-minute break structure to the downside here. Where's my supply candle? The candle before the candle that broke structures to the downside on the 2-minute. Here. Now that I have my 5-minute and now my 2-minute confirmation, I'm in here. Targeting the same exact thing. Right? Now you can see how that changes a lot as far as the risk to reward goes, and as far as how much we are going to be risking with this trade, just by literally waiting about a span of 10 minutes. If you would have waited 10 minutes, right, you could almost increase your risk to reward by 2 to 3 times. So I can almost throw 2 to 3 times as much as I wanted to in this second trade than I did in this first trade, just because I waited 10 minutes for that final 2-minute confirmation, right? That final break of structure to the downside versus noticing this break of structure and then just entering on one of these zones of supply, right? So now if we play this out, we're targeting those lows, right? We're targeting that demand zone first down here.
That bitch done took the whole move out.
The whole thing. Right, we target those lows. We see breaks of structures. If I look on the 4-hour on this same zone, I see a huge bearish candle, bearish engulfing put in. So I know this is just a liquidity raid to the upside, introduction of supply within this zone as well. So that means I can look to take these now to the daily lows after our demand candles were broken, right? Because now everything is in place. And at this point, I'm just holding the swing. Let's bring this to a 15. Let it play out until I get to my lows. Or I see some type of hourly structure form differently, right? At this point, hasn't showed anything yet. Then we get that final break, right? And then following, we get our lows taken out. We targeted that daily, right? That daily week low. Our 79 to 1 is done, or our 23 to 1, if we took a little less confirmed trade, is completed. And we can now look to take buys. Why? If we get a liquidation, right? Following a break of structure, I now know that the introduction of demand or supply has been introduced, and I can look to take any trades, either upside or downside. So with this, following this, and how I'm going to show you guys as far as liquidity goes, right, I want to do a little quick liquidity analysis, give you guys a definition of what it is to me and my style of trading, and how I can use it as far as my perspective goes, right? So I talk about liquidity a lot, but something that can get super confusing with liquidity and with these terms and with these concepts that we might see everywhere is that there is a common understanding or belief that just because there's a liquidity raid means there's going to be a reversal, and that could be completely false, right? And the reasoning for this is what we were talking about before, right? So if we raid liquidity to the upside here, but we hold close and then respect demand in these areas or respect demand in these areas, there's nothing that says price has to go down there. Price could completely break that weak high because that high failed to cause a new low, therefore leaving liquidity within this area, therefore leaving more reasons to come up, right? And maintaining a higher low. So just because we have a liquidity rate to the upside or the downside doesn't mean I'm going to be looking to take the trade, right? I still need that full confirmation. I need a liquidity raid by a zone of supply that broke structure to the downside on the hourly plus the 4-hour, right? It sponsored this entire move. I need more confirmations following. So when I talk about liquidity, I'm going to be referring to market behavior, right? That would induce, or I guess you could say induce or entice, right? A group of traders, right? A majority of people. So in this case, we're calling them the uninformed money, right? The retail traders, at any certain time to execute orders in a certain direction, allowing institutions to complete their own orders upon manipulation of such behaviors. So what does this mean? It's a fake out. That's like the most simple term I can put it. It's referring to market behavior that's making retail believe we're going one way and then it goes the other way, or the opposite, right? Believes we're going down and then we're going up, right? It's literally just a fake out. That's the most simple term to put it. Retail stop losses is going to be the form of liquidity that we are analyzing. I put retail in quotes because I speak of retail as in the uninformed money. The uninformed money is anyone who doesn't understand these institutional concepts, right, or understand the actual market for what it is, why it is made up, and why it moves the way it does. Liquidity can be in the form of live orders, right? Or it can be in the form of pending orders. What this means is it can be in the form of stop losses, or it can be in the form of limit orders. So you'll notice, right, and I talk about our demand zones and our liquidity raids, why we see liquidity raids, because we tap into this zone of hourly demand in this case, right? This is just to give a quick example to show you guys. But let's say I got a lot of limit. Let's say I'm a smart money trader, or I'm an Orderblocks trader, and I've done some work, right? And I go and identify this, and I set limits at the top of this zone, stops underneath this zone, or stops underneath some candles within this area, right? And I set limits at the top of this zone. Nothing tells me once I enter this zone that it can continue up or it will continue up, because I don't have that final confirmation yet. But let's say I set limits here, right? We can see that once price comes and taps into our zone, right, we get that immediate reaction following. So now we're like, oh, okay, like we're good, you know. We set our stops to break even. It's been a couple hours, 2-3 hours, and price is about 3% away from our entry. So we're like, okay, that's not bad, you know. It's a pretty good trade so far. So let's just let it be. It's 3% away. It tapped into my demand zone. I set my stops to break even. I walk away. I come back. I'm stopped out at break even. Price goes my way, right? We see the demand mitigation. Those limit orders filled. Price respect that, right? Price respect those demand orders, and then immediately after, create that long liquidity, liquidate that, and then that's where we get our institutional sponsorship, right? They're just letting all the liquidity build as much as possible until entering in, to be able to make the most money possible. So in this case, right, we're letting as much liquidity build before that final liquidity raid where we enter the trade and make the most money possible. It's the same scenario, right? The same thought process when we're looking at this, right? So the reason that liquidity creation is crucial for both institutions and just the market in general, right, is because as smart money traders, we talk about balance, and we need the market, right, and these institutions to return to an element of balance at all times, right? So if I am, and just to give another example, a hedge fund, and we talk about balance, right? You need a buyer for a seller. So if I'm a hedge fund with billions of dollars manipulating an asset, I don't have a seller or a buyer with my capital at that time, right? I can't do that. So what this means is I'm going to have to open multiple positions, letting some in drawdown, right? So I can do this. So let's say I'm an institution and price is moving up, right? I enter here in this area, price moves down, break structure to the downside, liquidity is formed, and I want to look to get out, right? So I'm starting to take profits in this area. We start to see a base formed, right? This is my supply. This is where I entered my trade. I've made a lot of money to the downside after liquidating traders over here, right? And I'm looking now to, one, get out of my trade, or two, make more money, right? So how am I going to do this? So now I need to bring price back to my entry zone, right, for the best possible average down or average up in this case. So I'm going to start taking profits, right? Price starts to move back towards my zone. Right, price is moving back towards my zone. I'm taking profits. Liquidity is being created. We have a lot of long liquidity being created, right? I'm starting to manipulate traders over here. People are thinking that it's going to go to the upside, right? Because it's getting all the way to that extreme of this zone. Price comes back up. I enter again at the same spot I entered before and double my profits, right? It's the same scenarios, the same way that we're looking at it as far as where we want to catch trades and where we would want to profit the most. Because as humans, right, as people with emotions, we can't block them out. We're just going to be straight up and we're just going to be honest with you. So how do we use emotions to our advantage, right? In this case, we can use greed to our advantage, right? Because we're looking at it from an institutional perspective who are greedy and who want to make the most money, right? And who do this within the market through manipulation. So if we can understand that and say, hey, if I have a bearish structure, a lower high formed, and I want to look to take another short, right, to the downside, I want to get as close to this lower high as possible, right, to enter my trade if I'm already in over here, or to add more to look to take profits again, right, and to continue to the downside. So that's why we'll see, one, the market will trace extremes for both the manipulation of retail and just emotional perspective of it, and two, we'll see those extremes traced, right, for that liquidation rates, both up and down. So if I'm a hedge fund, I need to sell or buy in this area, right? Buy my position back after I've made profits over here so that I can enter more after rating liquidity to the upside and then continue that trend. Well, let's go back actually. All right, so that was for the short part of it, right? Now people are gonna sit there and say, well, as far as logs and everything like that go, when is that gonna come? So that's gonna come on our next stream as far as the entries and everything like that goes. Because this is where it gets a little bit different, right? Because we don't have that full confirmation at this point. The entire trend is technically reset again at this point because we've created a new range in my eyes, right? So we talked about liquidity, we talked about our range, and we talked about how we can take both those counter trend shorts, or sorry, counter trend longs and counter trend shorts to catch the entire move, and how we cannot miss the move, and also how we can greatly increase our risk to reward just by waiting 5 to 10 minutes, right? So let me go ahead and get rid of this all for you guys, and then we're going to move over to Euro USD, and I will show you a similar concept on what happened today. So let's go to replay mode and let's figure out where I first found this and where I was first interested in this trade. So if I'm looking at Euro, right, we can see all this price action and we can get confused. So what's the most simple way and what's the most helpful way to understand what's happening is to literally look at the most right side of the chart, right? I'm only focused on the right side of the chart, right, because I'm trading the most current trend. And 2, 3, whatever your reason is. Mine is I want to make money that day or that week, right? Right, so if we're looking at our trend structure within this zone, I'm on my daily. We can even go to the weekly, right? We can see a high that caused a new low here. We can see our break of structure happened right here. Candle before the candle on the weekly is here. So this is my supply zone on the weekly, right? If I can refine that now to daily, you can see the same areas. Candle before candle on daily is here. Right, liquidity rate to the upside here, introduction of supply after this break of structure to the downside. This was your initial move that caused it. So after we react to this zone on the weekly, I'm looking for that right daily break of structure to the downside to indicate that I could possibly take this trade to the downside. Let's go to the 4 hour. actually back at this zone. Right, so now we see this impulsive move that broke structure, right? This low that caused a new high. If we go to the daily, we can see that same exact scenario, right? Let's disregard this candle. We're not worried about this candle at this point. I'm just worried about this impulsive movement to the downside right here. So I'm looking for possible zones of supply up in this area, right, to now indicate that this 4-hour breaker structure to the downside from this major impulsive move is my supply zone that I can look to take trades off of. So I have a 4-hour candle here. That I could possibly look to take sells from, right? And then we can go ahead and do some refinement within this area. So this is that first initial displacement candle move that I'm looking at to look to possibly take some sells. Why 1? Because our swing structure is bearish, right? So we could come up, create a lower high, continue to the downside. But 2, I can see this internal breaker structure to the upside now. So I have a possibility of my internal structure creating now a lower high and either continuing to the upside or just manipulating some traders up and down within this range, creating some type of liquidity range over here, right? But I'm looking at it like this right now. I see that hourly candle. I go to do some refinement, right? If we look in within this zone, or we look for that displacement, right? And this is something that Casper pointed out to me, and this is where we're going to do the practice now and understand what actually happened. So I noticed that 4-hour supply candle, right? That candle before the candle that broke structure. But if we notice within, after we do some refinement, if I look on the 30-minute, if I look on the 15-minute, all of the supply that was created within this zone looks to have been mitigated, right? All of this, all these candles are lethargic. Nothing really showed me that structure break to the downside. Nothing showed me that, right, that it wanted to move to the downside until we get to this candle right here. Now we see that zone of redistribution following right after this candle. So we know that there is supply creation within this area. If I go to the hourly, and looking around this zone, right before that displacement candle, we can see that same exact thing. So this is our breaker structure to the downside here. Hourly time frame, right? We look within, we see our hourly institutional candle right here. I can look to possibly take some sells and target this possible weak low that was created, right? If I come up into this zone and show that. So at this point in time, right, we have a bullish swing structure with demand in this area. Last consolidation before the move that has been unmitigated, right, in this area. So I'm looking at something like this right now. It's where price comes up, creates a lower high, comes down, continues to the downside, right? And then I can look to do with it from here what I want to based off of market structure. But right now, I'm just focused on a short to the downside, right? Or depending on structure in this zone, possible longs to shorts. So we identified our candle on the 4-hour to the 1-hour, right? That zone that we had. Now if I get rid of this, to show that a little more clear. As well as the entries, right? Right, I'm looking at an idea like this right now. Based off of the daily breaker structure to the downside, right? Following a 4-hour breaker structure to the downside. After tapping our weekly supply, right? That caused a new low. So the weekly high that caused a new low. right? Targeting areas down here. So let's let price play out. Price now comes up internally and creates a new high, right? So this is very similar to what we were seeing before, right? Where we saw that liquidity being formed, right? Those equal highs being formed, and then we could possibly see a return back into this zone. Now, what was I talking about before with the internal structure, right? If we create this lower high here, we could possibly break structure, create a higher low here, right? And continue. But at the same time, we're looking at our higher time frame structure. So we know that there's demand in this area, but we also know that supply has more of a chance to overtake demand due to our higher time frame bearish structure. So if I wanted to take possible counter trend longs within this scenario, right, I could look to take longs if we come back down into our zones of demand from this original break of structure to the upside, right, this original move here. So we see our reaccumulation, right, our entire consolidation here, just to make this easy and do the entire zone. I can look to take buys here. So this play out. Right, price comes into our zone. If I were to buy there, I buy here targeting this, or I can wait for that following confirmation, right? We get that impulsive move to the upside right here, this impulsive candle here. If I look on the 30-minute, you can see structure breaks and demand creation followed by imbalances within this area, right? We have an institutional candle as well. So if I miss this entry, I can look at areas here. Because structure is maintaining that bullishness, right? Let's let this play out now on hourly. Right, price comes into that zone as well. We can see how we're continuing to respect demand, create higher lows, higher highs, but at the same time, I'm still looking at the overall picture, right? I'm noticing that we're starting to create that liquidity, right? We're starting to create equal highs right before an unmitigated zone of supply, as well right before an unmitigated zone of supply within a swing bearish structure. So I can say, oh, okay, this is starting to get a little more prominent to me that I want to be targeting this area as well as looking to take possible shorts within this zone. So now if we let price play out, right, we can see that following and see what happens. So we identified that institutional candle and we said, well, look, it missed here. And the reason I'm showing you guys this the way that I am right now is because I wanted to give you guys my perspective before I went back later and was able to say, oh, okay, this is where I can understand, okay, price reacted off of here, right, and mitigated here, what happened, and what was the reasoning for that. So we had an idea, right, that we wanted to catch the trade in this supply zone within this area. And we had our breaker structure to the downside, our institutional candle, we had a lot going in there. But if I now go to refine this area on lower time frames, just like I was showing you guys before, we would pick this zone. Why? Because this is the one that broke structure to the downside, right? As well as brought us that displacement, right? That high volume candle, as well as that lower time frame redistribution within. So if I'm looking at institutional candles here versus everything that looks to have been taken care of here, right? We look to have mitigated it, continue to the downside, mitigated, continue to the downside. There's no displacement within this area that has not been mitigated that I'm going to look to take this trade from. So now, right, I identified this zone of redistribution. You can pick the entire zone that broke structure to the downside or just the institutional candle. I usually do just the institutional candle to look to take the trade. So now, if we're doing the same exact scenario, right, we can see how our trade is now tapped in. We're taken out of our trade. And then we finally get that continuation from that, right, that hourly break of structure to the downside. So you can see how we can get that analysis paralysis, right? When trying to figure out which zone is true, which one is this, which one is that. The easiest way to do this is that you will see the same exact picture, right? The same exact theory that you're looking for on each time frame. You're going to see that displacement followed by demand creation, right? On each time frame. This was a 15-minute. Let's go to the hourly and let's look at this zone now. If it was the candle before the candle that broke structure, yep, before that displacement, right? This was your low that caused a new high. This was your candle before that candle that broke structure to the downside here. This displacement candle, supply introduction here, right? So I look to target that supply as well as short that supply when we get into that zone, because our overall idea is bearish, as well as we're creating equal highs here right before a supply zone, right? So then you get that final continuation. Now, is there any questions or charts or anything that anyone wanted to have me look at before I end this here in about 15 minutes? We'll go over Bitcoin, ETH, look at what they're doing real quick, and look to take the next trades on those. But I'll give somebody like 2-3 minutes to ask a question real quick. If not, then I will go ahead and get started. All right, so for ETH, Casper talked about in his stream, and I've talked about these lows, right? These lows that we've received within this range, how this could be a reaccumulation if we continue to create clean highs and lows, right? Get more shorts in trades, start to create that liquidity, right? All those equal highs that we had mentioned before. We can start to see all these highs formed as we are coming down within this range, right? This creek is just inducing liquidity, building liquidity before that breakout, right? Introduction of demand, and then we'll look to take that trade to the upside. So now within this case, in this scenario, this is similar to what I'm looking for ETH, right? We just took out this hourly high. If we can now come into this zone, right? This demand zone. Or on lower time frames, if I'm looking at this extreme move, right? If we come down in this demand zone, possibly mitigate these institutional candles, right? Down at the 1778 area, create a higher low, then I'll definitely look to take this for higher prices into the range. I want to see at least that 2051 unmitigated supply zone on the 4-hour, and then if we can break that, then I can see definitely a lot higher into the range as far as our unmitigated supply and demand goes, around the 23 area first. But I will let you guys know that we still have our higher time frame strong high, right? Our introduction of supply at the 2131 area as well as the 2086 area. So until these strong highs are broken with conviction, until I get a higher time frame close over these highs, I'm not so much going to be looking to take any long positions after reaching demand. Why? I see this as an internal weak high, internal strong low, right? This low that caused a new high internally. And then I see that liquidity, right? That buildup of shorts right before that unmitigated supply zone. Same exact thing that we talked about, right, for Euro USD. Same play that we talked about for this short right to the downside right here. Actually, sorry, this short to the downside right here. Same exact scenario that we could possibly see come into this zone. Until we are over this strong high, right, we could come up in here, liquidate traders out, mitigate supply, continue to the downside, go for those higher time frame weekly lows that we've been talking about, right? Because we still have not liquidated those lows to the downside, but depending on structure, I will still take longs if we can get that show of bullish strength, right? That sign of strength, which we are starting to show. Not on higher time frames yet, but right now internally we are. So I'll definitely be looking to possibly take some buys depending on our lower time frame structure, and just to give a broad range. The 1786 through 1768 zone, if we can come possibly create a lower high, or sorry, a higher low within this zone on the 5-minute break structure to the upside, create some demand, then I'll look to take this trade to the upside and to the top of the range, right, into these highs here, into highs over here, and then 2 highs up in this area. Why? I see this as that strong low and that weak high, so I see it coming up like this, creating a lower high, continuing into this area. We can go ahead and check Rune real quick, see how Rune is doing. This was one I wanted you guys to look out for. Let's go to the perp chart real quick. I think I have my TA on there. And then after Rune, I will leave you guys for the night. I guess it doesn't want to show it to me. Okay, so Rune, quick little update, right? We had our weekly liquidity rate to the downside in mitigation of this daily reaccumulation in this zone. So I know there's demand here, right? That consolidation before the expansion. So we have a weekly liquidity rate to the downside, mitigation of daily demand, daily breaker structure to the upside, this high that caused a new low, right? I'm looking at body closures on the daily. I go to the 4-hour, I'm looking at zones of demand. I can see this reaccumulation here, right? This candle right here, as well as this entire consolidation zone. So if I want to draw out the zone to keep it nice and simple, this is your first initial impulsive candle, right? If we look on the 4-hour, this 4-hour didn't break structure to the upside. This is where we had that 4-hour high broken. So this would be your demand zone within this area, right? This consolidation here. But if we wanted lower prices within this extreme swing range, we're looking at premium here, discount here. We can look to buy based off of structure if we're down in this zone. If we can get breaker structures to the upside, look to sell in these areas, right? So now that I have a daily breaker structure to the upside, I have the possibility of creating a higher low within this area, taking it higher into the range. Now, due to the fact that we have liquidated weekly liquidity as well as mitigated daily reaccumulation, so that daily demand, as well as our range being from $2 to $4 on the 4-hour, and then roughly up to $7 on higher time frames, then I'll definitely be looking to take this trade to the upside as well. So on the hourly, I will be either looking for these highs to be taken, followed by an introduction of demand, right? That impulsive candle to the upside that shows, or if we can get lower prices in these areas, create a higher low, I will be looking for the same exact scenario. But I really like Rune Longs, man. But yeah, that is pretty much what I had for you guys today. I appreciate you guys popping out. Like I said, I'm gonna be recording this stream. Any questions, comments, anything like that, feel free to respond in either crypto chat, YouTube, DMs, wherever you guys can reach me. Let me know. Thank you guys again for coming out tonight, and I will catch y'all later.
Love your flow.
Fortnite.
I love you more.